My name is Jesnita. Membership number is A228068. I will tell about the introduction. In this assignment, we are required to choose two companies that are in the same industries and select the recent companies' financial records, which are from 2021, 2022, and 2023 to be analyzed. So, all this information that we need, we got from Bursa Saham Malaysia website. The companies that we choose are Oriental Food Industries Holdings Berhad and Kawan Food Berhad. Both companies are well-known conglomerates companies in Malaysia. Oriental Food Industries Holdings Berhad is a business that focuses on providing snack food, while Kawan Food Berhad is focused on providing frozen food. Both companies have made substantial contribution to economic development in Malaysia.
Hi, my name is VISALNI SELVAN. My matric study is 8228035. Oriental Food Industries Holding Berhad, OFI, is a Malaysian company manufacturing and marketing snacks, fruits, biscuits, and confectioneries with segments in property development and investment holding featuring brands like Super and Jacob. Kawan Food Berhad, a Malaysian company, manufactures and markets frozen foods like parathas and spring rolls pastries under brands Kawan and KZ Pastries, distributing globally and focusing on quality, innovation, and sustainability.
For the liquidity ratios, we have current ratio, which equals to current assets divided by current liabilities. So for the 2021, the current ratio is 3.05, 2022 3.31, 2023 3.72. The next one is quick ratio, which is current assets minus inventory divided by current liabilities. So for the 2021, the quick ratio is 2.17, 2022 2.35, and 2023 2.52. The last one is net working capital, which is equals to current assets minus current liabilities. For the year of 2021 is 82 million 294,869 ringgit. And then for the 2022, 102 million 985 887 ringgit. And then the last year is 114 million 743 592 ringgit.
Next is calculation ratio for Oriental Food. For activity ratios, we have inventory turnover, average collection period, account receivable turnover, fixed assets turnover, and total assets turnover. So we have 3 years, which is 2021, 2022, and 2023. So for inventory turnover, we have 6.85, 6.06, and 6.55 for each years. Next is average collection periods. For 2021, we have 59.68 days. For 2022, we have 67.47 days, and for 2023, we have 63.59 days. And then account receivable, we have 6.12, 5.41, and 5.74 for each years. Next, fixed assets turnover, 2.52 for 2021, 2.56 for 2022, and 2.92 for 2023. And lastly, for total assets turnover, we have 1.11 for 2021, 1.05 for 2022, and 1.262 for 2023.
The next part is leverage ratios, which includes debt ratio equals to total debt divided by total assets. For the 2021, the debt ratio is 21.60%, and the year of 2022 is 21.75%, and the last year is 19.76%. And the next one is debt to equity, which equals to total debt divided by total equity. 2021 it equals to 27.54%, and for the year of 2022, 27.80%, and the last year is 94.62%. The last one is time interest earned, which equals to EBIT divided by interest. For the year of 2021, it equals to 53.80, and the next year is 91.51, and the last year is 153.40.
Today, I will provide a brief overview of the financial performance of Oriental Food Industries Holding Berhad over the past 3 years, focusing on key profitability ratio. First, the operating profit margin, which measures how much profit we make from our operations before interest and taxes. In 2021, it was 7.86% and increased to 8.48% in 2022, but dropped to 6.9% in 2023. Next, the net profit margin. Showing our net income as a percentage of sales, it stood at 6.25% in 2021, slightly improved to 6.3% in 2022, but declined to 5.31% in 2023. For the operating return on assets, indicating how efficiently we use our assets to generate operating profit, it had 8.72% in 2021, a notable increase to 14.33% in 2023, and then a decrease to 11.96% in 2023. Finally, the return equity, which shows our net income relative to shareholders' equity. This was 8.84% in 2021, dropped slightly to 8.22% in 2022, and then fell to 4.84% in 2023.
The next company is Kawan Food Berhad, which also include liquidity ratios. Below them, we have a current ratio, which is equals to current assets divided by current liabilities. For the year of 2021, it equals to 3.75. The next year is 4.36, and the last year is 4.34. For the quick ratio, it equals to current assets minus inventory divided by current liabilities. For the year of 2021, it equals to 3.09, and the second year is 3.53, and the last year will be 3.62. The last one is net working capital. The formula is current assets minus current liabilities. For the year of 2021, it equals to 138 million 222 and 317 million ringgit per every ratio. And for the second year, it will be 172 million 098 and 975 ringgit. For the last year, it will be 182 million 519,668 ringgit ratio.
Next is calculation ratio of Kawan Food. For activity ratio, we have inventory turnover, average collection period, account receivable turnover, fixed assets turnover, and total assets turnover. So for this calculation ratio, activity ratio, we have 3 years, which is 2021, 2022, and 2023. For inventory turnover, we have 5.27, 5.13, and 5.63 for each years. Next is average collection period. We have 80.46 days, 82.49 days, and 96.21 days. Next, account receivable turnover for 2021, we have 4.54. For 2022, 4.42, and 2023 we have 3.79. Next is fixed assets turnover. We have 0.59, 1.39, and 1.47 for each years. And lastly, total assets turnover for 2031, 0.59, 2032, 0.636, and 2033, 0.62.
The next part is leverage ratios. For the Kawan Food Berhad, the debt ratios formula is total debt divided by total assets. For the year of 2021, it equals to 15.16%. For the next year, it equals to 13.88%. And the last year will be 14.67%. The next one is debt to equity, which is equals to total debt divided by total equity. For the year of 2021, it equals to 17.87%. And the second year is 16.11%. And the last year will be 17.19%. The last part will be time interest rate, which equals to EBIT divided by interest. For the 2021, it equals to 89.53. 2022, 129.53, and the last year will be 165.92.
First, the operating profit margin, which measures our operating profit as a percentage of sales. In 2021, it was 40.8%, slightly decreasing to 40.72% in 2022, and further declining to 12% in 2023. Next, the net profit margin, indicating our net income relative to sales. In 2021, it was 12.62%, increased to 14% in 2022, but dropped to 10.5% in 2023. For the operating return on assets, showing how efficiently we use our assets to generate operating profit, it was 8.6% in 2021, increased marginally to 8.8% in 2022, and then decreased to 7.5% in 2023. Finally, the return on equity, which reflects our net income as a percentage of shareholders' equity, this was 8.91% in 2021, rose to 10% in 2022, but then fell to 7.62% in 2023.
Good day everyone, my name is KESADARSHINI RAVINDRAN and my matrix number is A2A1150. So today I would like to present 5 part, which is horizontal analysis. So here we have 2 companies, which is Kawan Food Berhad and Oriental Food Holdings. So according to the horizontal analysis, the analysis was made based on the calculation of ratio at the earlier part. So here are one of the examples from the horizontal analysis, which is liquidity ratio. So the liquidity ratio shows that the company has demonstrated a strong and improving liquidity position over the 3 years. The current ratio rising from 3.75 to 4.34. This indicates an effective management of current assets relative to liabilities and the ability to cover its short-term financial obligation on the firm. Meanwhile, for the quick ratio, the interpretation is the company has shown a consistently improving quick ratio for the over 3 years, rising from 3.09 to 3.63. This indicates a progressively stronger liquidity positions with a growing ability to meet the short-term obligations using high liquid assets. Another calculation of ratio from liquidity ratio is inventory turnover. So the interpretation is the company demonstrated an effective inventory management with an improving trend in inventory turnover over 3 years, starting from 5.27, dipping slightly to 5.13, and then rising again to 5.63. The overall positive trend reflects well on the company's ability to manage its inventory effectively, supporting its sales operation as well. So below are the graphs that shown for all these 3 financial liquidity ratio of Kawan Food Berhad. So here are the horizontal analysis of Oriental Food Holdings. So here for the example we have shown the activity ratio. So the activity ratio includes average collection period and account receivable turnover. So based on the interpretation that we got from the horizontal analysis, the company has experienced a declining trend in its average collection period over 3 years, increasing from 59.68 days to 63.59 days. This indicates a growing delay in collecting receivables, which will negatively impact cash flow of the business. And secondly, account receivable turnover. So the interpretation is the company's account receivable turnover ratio fluctuated over the 3 years from 6.12 in year 2021 to 5.74 in year 2023. This trend reflects changes in credit policies, customer creditworthiness, or collection efficiency. The following are the graphs that illustrated the activity ratio of Oriental Food Holdings, which includes average collection period and account receivable turnover. Now I will explain about the vertical analysis. The first one is current ratio. Based on this table, we can see that Kawan Food Berhad has a higher current ratio for the 3 years than Oriental Food Industries Holdings Berhad. This shows that Kawan Food Berhad has a stronger short-term liquidity and has more current assets. Next is quick ratio. Based on this table, we can see that Kawan Food Berhad has a higher quick ratio for the 3 years than Oriental Food Industries Holdings Berhad. This shows that Kawan Food Berhad has stronger liquidity and bargaining power than Oriental Food Industries Holdings Berhad. Next is average collection period. Based on the table, we can see the consistent increase of Kawan Food Berhad for the 3 years. The increase in average collection period is not good for a company because this means that they face a growing challenge in collecting receivables promptly. This is the red flag for cash flow management. Next is the account receivable turnover. In this table, we can see that Oriental Food Industries Holdings Berhad shows a decline in the turnover ratio from 2021 to 2022, but slight improvement in 2023. This indicates some recovery in receivables management after a dip in efficiency. Meanwhile, Kawan Food Berhad shows consistent decline in the turnover ratio over the 3 years, highlighting growing inefficiency in collecting receivables. This aligns with the increasing average collection period, further suggesting potential issues in cash flow and credit management. Next is fixed asset turnover. In this table, we can see that Oriental Food Industries Holdings Berhad has a higher than Kawan Food Berhad for the 3 years. This shows that the companies are making effective use of their resources to produce sales and successfully earning revenue from their assets. And last one is total asset turnover. In this table, we can see that Oriental Food Industry Holding Berhad total asset turnover have decreased from 2021 to 2022 and increased again in 2023, while Kawan Food Berhad has increased from 2021 to 2022 and decreased again in 2023. This shows that both companies are not consistent in their total asset turnover. The decrease might happen because there is a decline in their sales, while the increase may happen because they have generated more revenue from their assets. Next is net working capital. Based on this table, we can see that Kawan Food Berhad has greater net working capital for the 3 years that Oriental Food Industries Holdings Berhad. This shows that Kawan Food Berhad has enough available cash to cover its upcoming short-term obligation. Next, inventory turnover. Based on this table, we can see that Oriental Food Industries Holdings Berhad has a higher inventory turnover for the 3 years. This shows that the company had sold many more items in the straight 3 years, which means that they are efficient in managing their inventory.
Hi, my name is HEMAVARTHINI SUBRAMANIAM. My network ID is A22A0437. Today I'm going to explain about the vertical analysis. So I explain from the debt ratio. If we compare to Oriental Food Industries Holding Berhad and Kawan Food Berhad, we know that Oriental Food Industries Holdings Berhad has a higher debt ratio compared to Kawan Food Berhad. This shows that Oriental Food Industries Holding Berhad has more liabilities compared to its assets. Next is the debt to equity. Oriental Food Industries Holdings Berhad has a higher debt to equity ratio compared to Kawan Food Berhad. It shows that Oriental Food Industries Holdings Berhad is funded by loans. Next, I explain about time interest earned. Time interest for Kawan Food Berhad is higher than Oriental Food Industries Holding Berhad. It shows that Kawan Food Berhad generate enough income to cover their interest expenses. Next, I explain about operating profit margin. Kawan Food Berhad have higher operating profit margin while profit margin value than Oriental Food Industries Holding Berhad over the years. This suggests that Kawan Food Berhad operates more efficiently than Oriental Food Industries Holdings Berhad. Oriental Food Industries Holdings Berhad has shown a significant drop over the year, which indicates that they have not operating efficiently. Meanwhile, the rise of Kawan Food Berhad over the years showed that they have been using their resources effectively to its fullest. Next, I'll explain about net profit margin. Both Oriental Food Industries Holdings Berhad and Kawan Food Berhad has shown that a slight increase from the year 2021 to the year 2022 and decrease a little from the year 2022 to the year 2023. This suggests that Kawan Food Berhad has stronger profitability than Oriental Food Industries Holdings Berhad. With higher margins, Kawan Food Berhad might be able to offer lower prices, invest in research and development, or simply retain more profits for future growth. Next, I explain about return on assets. Oriental Food Industries Holdings Berhad has shown an increased return on assets. This suggests that Oriental Food Industries Holdings Berhad used its resources effectively to generate more income. Meanwhile, the drop in Kawan Food Berhad shows that they have operational inefficiencies. Last, I explain about return on equity. Kawan Food Berhad has shown an increase in return on equity, while Oriental Food Industry Holdings Berhad decreases over the years. This shows that Kawan Food Berhad's operational efficiency in generating profits is better than Oriental Food Industries Holdings Berhad. This means that the company can control costs and improve operational efficiency to generate greater profits per unit of revenue. Shareholders see this as a positive sign, as it shows Kawan Food Berhad can manage its business well and generate a healthy income. That's all from me. Thank you.
Hi, it's me again, and here I would like to talk about the recommendations that can be made for the both companies, which is Kawan Food Berhad and Oriental Food Holdings, based on the calculation of ratio, horizontal analysis, and vertical analysis that I made at the earlier part. So, based on the analysis, Kawan Food Berhad should work on cost management, improve their margins by reducing cost without compromising the product's quality. Meanwhile, they also need to improve efficiency and asset utilization by utilizing the existing resources more effectively in their firm. They need to strengthen the financial health and liquidity while ensuring efficient use of working capital of the firm. And so finally, they need to foster a sustainable growth and innovation in the industry by enhancing the productivity of product development. Meanwhile, for the Oriental Food Holdings, the firm needs to enhance of revenue growth by increasing the revenue of firm through the market expansion and product innovation. Next, they need to develop the product diversification by developing new product line which caters to different type of consumers. And finally, they need to leverage technology for operational advancements by improving digital transformation by utilizing digital technologies in their firm. Now, we are at the conclusion part of the presentation. In conclusion, by addressing these strategic ideas, Kawan Food Berhad and Oriental Food Holdings can improve their financial performance, enhance competitiveness of the firm and position, and build themselves for a long-term success in the dynamic food industry. That's all for me. Thank you.